Welcome to all of you for watching the second part of the digital customer onboarding series, which will be assisted through a mind map. This part of the video has been broken down into two sections. In the first section, we'll go through the different sectors or the segment of customers which banks cater to, and we'll go through various products and services which are being offered by the banks. As I said in the previous video, we won't be getting in detail on the subject as it is too vast, but at the same time, we will give a high-level overview to set the context as well as to help the viewers who are new to the banking industry. The latter part of this video would be emphasizing on the key challenges or the background of why digital onboarding has become so much significant within the banking industry. So let's begin. The banking industry focuses towards multiple customer sectors or groups and is broadly categorized into retail customers. Retail customers are the largest customer base for the banks. The customers under this sector are mainly the mass citizens or individuals like us who takes banks' help for performing our day-to-day financial transactions. Then we have MSMEs. MSMEs are the micro or the small or medium enterprises like shops, proprietorships, partnership firms, or the trust or the startups, and any such enterprises which comes under a specific threshold of turnover or the size of the entity. Then we have corporate customers. These are all the remaining conglomerates who have crossed the limited threshold definition of SME and have large business. The segregation of SME and corporate segment do differ across countries and also with banks within the country, as these are defined by the respective banks based on their business strategies. Then we have microfinance customers. These are mainly the unemployed or low income individuals or groups who does not have access to the conventional bank. This segment has been encouraged by government across multiple countries just to ensure that there is a promotion of financial inclusions as well as it can help the economy in a better way. The customer segments are also based on multiple other parameters like geography, investments, portfolio, etc., which I will not get into at this point of time. Let's go through the products and services big banks offer across each of these segments. Savings account. This is the most widely used product in the banking industry which are applicable for retail customers. Within saving account, there are various categories like a standard or a regular saving account which we retail customer open with bank to manage our regular incomes and expenses. Then we have joint account which we can open along with our family members to tailor-made services for our family. Then there are specialized products for different age groups like senior citizen or a minor account for kids. There are salary accounts which can be opened by our employees to deposit our salaries. And then there are premium accounts which are specially categorized to give special services for HNIs or high net worth individuals. Coming to the current account, this is a bank account for people who run businesses, also termed as business account, and it is applicable for all customers coming under the MSME and the corporate segment to conduct their day-to-day financial or business transactions. Then comes term deposits. Term deposits are broadly two types. Fixed deposit products are applicable for the customer who would have got a fixed lump sum amount and wants to save or invest. And then there are recurring deposit products which are applicable for those who wants to have the practice of regularly depositing certain amounts of money into this account to achieve a particular financial goal. Both these deposits are availed by the customers so that they can gain more interest than the traditional saving account. Then comes loans. Loan products, as we all know, is an important offering from bank where money is lent to an individual or a company to achieve the need of the end customer. Is categorized into secured and unsecured loans, and within each of these there are various products which have been offered, which includes personal loans, credit card related loans, group loans given to microfinance segment, and all these loans are provided without any security or collaterals, as these are given after analyzing the various credit history of a particular individual or a group. Then there are loans which are provided against collaterals or assets like vehicle loans or the home loan, property loans, gold loans, etc., which comes under the secured loans. Then there are a few loans like export finance or term loans and working capital loans which can be termed as secured or unsecured depending upon how the bank offer these services to their SME and corporate customers basis their relation with the end customer. Then there are credit cards, a familiar product which all of us are aware of, which is for buying or making payments when there is no available money in our account, or to avail certain benefits or services which can be achieved through credit cards like international purchases or lounge facilities and many such benefits. Credit cards are given to customers based on the usage pattern, and companies offer different level of credit cards like gold card, platinum card, and various such levels have been defined for the respective card holders. Then comes Demat account. This product is given where respective customers can transact for equity based portfolios like shares or mutual funds or debentures and so on and so forth. Then there is cash management. As the term states, this product is for helping mainly the business entities to manage their cash inflows or outflows to mobilize the available funds, thereby optimize the liquidity. Then we have trade finance products. The product through which most of the financial transactions of export or import of goods are executed comes under trade finance. Some of the largely used trade finance products include import-export of letter of credits, bill collections, guarantees, and similar such products. Then comes supply chain finance. This is the product through which the business owners, especially the suppliers, sell their invoices which they would have got from the buyers to banks to get benefit of finance immediately. Now, invoice financing, bill discounting, and factoring are some of the widely used supply chain finance products. A small disclaimer, there are varied segments and products and services beyond what I have shared. So please refer to relevant material to get more details on each of these subjects. Now let's understand the background or the challenges which has led to the evolution of digital onboarding, and we would like to cover in 4 different areas. First, how does the onboarding used to happen, or even today, how does many of the banks perform the customer onboarding activity? The large part of the process are manual. When I say manual, this means right from the time when the customer intends to buy a product, or sales team explaining the product benefits, or capturing the information or the documents, or verifying or validating the authenticity of a customer, and many such activities which are part of the process are manually executed with person involvement. Next, the process is heavily document centric, which is required to adhere to the foolproof compliances, which includes different type of KYC documents, income statements, business related documents, etc. Most of these documents are largely unstructured, which leads to a huge difficulty in capturing the information into the systems. The most important part, there are multiple stakeholders involved in the entire process, and most of them working on different systems. There are multiple occurrences of same or common information being keyed in multiple systems by different team members. What happens due to this kind of processes? There is a long processing time. The time taken to perform each of the tasks becomes longer and delays the entire process. There is duplication of data entry. Most of the customer information remains common, but since the system which bank uses are not interconnected, there are need to enter same information at multiple systems, not only causing the delay but also the concern on reconciliation of data among different systems. There are multiple to and fro's. There are no control system at the relevant stage of the process, which causes exceptions among bank frontline team or the back office team, and also with the customer. And then there are a lot of notifications and other things which keeps going between each of these stakeholders. Lack of collaboration or ownership. Since there are diverse teams working on the process, there is no ownership and lacks collaboration to provide a frictionless customer experience. Also, there is lack of audit trail, which is not been tracked in terms of who is doing what and when, as most of these activities are physically executed, and even if tasks are executed on systems, it doesn't capture the entire log, which can lead to frauds and risk. There are large back office teams who are involved in verifying and validating the data or the documents, etc., trying to ensure all the information provided by customers are not faulty and in line to expectations. Now, because of this, what are the various consequences that are being caused? And these are multifold for customer, for bank staff, and as well as to the bank. Let's go through this. First and foremost, because there are multiple people and long time involved in the process, the operational cost multiplies. There are high probabilities of slippages happening in the process, causing banks to pay hefty penalties to regulators and also encounter fraud cases. Since the front office and the sales team are more involved in the processing activity, they are not able to spend quality time with customers to upsell or cross-sell and give value adds. Since there is no time for front office team to give guidance or attention, there are frustration at customer side, and all leading to customer looking out for better alternatives, and the abandon rate increases. what is the final outcome of all these consequences? Two broad level outcome which I thought of bringing is there is a heavy business or a revenue or an opportunity loss for the banks, and then there is a reputation or a goodwill loss which starts hampering the bank in a big way, not only for a short term but it will carry on a long way. To overcome all these challenges, digital onboarding has taken up a high priority among banks, and we'll take you through the various factors that has to be considered while implementing a digital onboarding solution in our next video. Thank you for watching this video. Hope it was helpful for all of you.